Hello and welcome to the Motilal Oswal studio. You're watching Buy Now Sell Now on ET Now with me Shreyansi Singh and Cheryl D'Souza. And over the next 1 hour, we'll get you all of your stock-related queries answered from both a technical as well as a fundamental perspective. But well, first things first, we've got to take a look at the market and quite a lot of sectors holding on to a tinge of red at this point, Cheryl.
Absolutely. A very good morning to you, Shreyansi. And if you look at the markets, definitely, I don't think there is any love in the markets right now, given the fact that we are in the negative territory and we've slipped pretty fast actually from the day's highest point, 0.8% downtick from the day's highest point. When you talk about the Sensex, it's broader markets, the carnage there is pretty deep, it is pretty steep, and there doesn't seem any respite in that particular front. Yesterday was one day when you saw the advanced decline ratio tilted way too much in the favor of gainers, but yes, we gave up most of those gains towards the end of the trading session. And today, likewise, if you look at the advanced decline ratio, pretty stark difference from yesterday. 2,221 stocks declining on about 319 that are gaining in trade. You have the broader markets down and out in trade. 2.7% downtick from the day's highest point coming from mid-cap index. Let's take a look at what small-cap index is doing. What sort of pressure is there on that particular end of the market? That one is falling much more than the rest of the markets, or rather compared to mid-cap and the Nifty at this point in time. Almost 3% downtick coming in for the small-cap index. Talking about the sectoral print, then nothing looks good right now apart from FMCG pack. Pharma, the top sectoral loser in trade today, 2.8% downtick coming in for the pharma sector. Remember, yesterday you saw a good rally on this particular sector, given the fact that there were hopes riding on that this one would be exempted from tariffs. But that's not the way how it's transpired, because in fact the commentary did not mention anything about pharmaceutical sector being exempted from the tariffs. In fact, we have commentary saying that there are chances that we will have reciprocal tariffs from April 1st onwards, and no exemptions mentioned on that particular front. So you have pharma index down about 2.7% as we speak. Apart from that, you have select media stocks that are declining, PSU sector under pressure once again, energy sector, realty, all of them down and out in trade today, Shreyansi. So yes, so not a pretty picture coming in for the markets. We are ending the week on a weak footing, looks like it.
Well, absolutely, Cheryl. Weak footing is what it looks like for us. A whole lot of red, not much of love on the markets as far as we're concerned. But let's see how the rest of the day pans out. But with that, let's also kickstart the show, start taking all of your stock-related queries. And before we do that, the number that you can write to us is going to be flashing on the top of your screens as well as on your screens. Do remember to mention the buy price for the stocks that you're already invested in, and for the stocks that you hope to be invested in, mention the time horizon that you have in mind. There you have it on your screens, the number that you can write to us at. But with that, let's also kickstart the show, start taking all of your stock-related queries with our guests then. Rupak, who's the Senior Technical Analyst at LKP Securities, as well as Lancelot Dcunha, also joins us. He's the Chief Investment Officer at ValueX Wealth Connect. Thank you so much for joining us. Good morning. And the first query that we in fact have coming in. Before I do that though, I wanted to quickly get your take coming in. As far as the pharma index then is concerned, Lancelot, what do you make of this particular move that we've seen of late when it comes to this particular index?
Yes, there is those pharma companies which have a large amount of exports to the US could have, some impact. But at the end of the day, most of these pharmaceuticals are selling drugs which are needed for the healthcare sector, and there are many essential drugs. So I don't think the consumption will be restricted, because pharma is a necessity, based or even for the US company. So you will see, sales, etc., pick up. So from that perspective, the fall in valuations could be an opportunity to look at adding to some of these companies in your portfolio. And many of the pharma companies also are largely focused on the India market. So those companies wouldn't really get impacted negatively. But in this fall, since all pharma companies are looking weak, you may get an opportunity to add some of these companies to your portfolios.
All right, so that's the take coming in on pharma space, given the fact that a lot of people actually looking at this particular sector up pretty close. But let me kickstart taking the queries then. And the first query, Rupak, let me come to you and ask you about the fact that Reliance Industries, our viewer Santosh, has about 100 shares of Reliance Industries at this point in time. And he's saying that he has bought it similar to the buy price at this point in time, around 1,230 odd levels. He's saying the stock has not done anything much, and he doesn't know which direction this would go on to. What's your take coming in on Reliance Industries? Because a lot of hope was penciled in that this would actually go ahead and give that flip to the markets, but that's not how it's transpired. In fact, it's weighing heavy on the markets now.
So Reliance has been falling with a lower top, lower bottom formation on the daily chart, and it is looking like that Reliance might fall further from here. Its support is there at 1190. Below 1190, Reliance might fall down towards 1100 in the very short term. As the stock has been sustaining below the importing moving averages on multiple time frames. So my view is that Reliance is likely to remain weak for the short term.
That's a take coming on Reliance Industry on the technical front. Lancelot, let me come to you and get your take on Reliance Industries, because this one has actually been seeing a very muted sort of returns. Every time everyone pins hope on something happening on Jio IPO, maybe everyone tries to gauge this one in the fact that the much imminent IPO of Jio platforms. How should one actually look at it right now when it's stagnant, underperforming, and also dragging the markets along with it?
I think, as far as Reliance is concerned, the results were fairly in line with expectations for this quarter. And the outlook is that, on the refining side, things will remain relatively muted. I think petrochemicals is doing better. The big trigger for Reliance, obviously, is the Jio Retail, the IPO that is expected, the Reliance Retail IPO. And that was what really could see some unlocking in value in terms of, on the Reliance side. So given that background, this stock, while it is looking a little weak in the short term, over the longer period should give you, higher returns as and when these events occur. So whenever you see the IPO coming in or the demerger and of some of their businesses into separate entities, which will then get listed, you will see the value unlocking happen. And at that time, the markets would then compensate for whatever periods of, let's say, slowdown or non-movement of price that is there.
This next query that I have is coming in from Dinesh, and he wants to know about the sectors, especially in the PSU space, that one can look at this point in time. Lancelot, I'll come to you, because given the fact that PSU sector, we saw a mass rally in the entire PSU sector space, be it the energy, be it your banks, be it even your metal space. But what's your take now when you look at the PSU pack as a whole, given the fact that you've seen a lot of them see substantial decline, even the defense pack for the matter of fact. So how should one gauge the entire PSU space, and do you think now is the time to go ahead and invest in any of these counters or subsectors?
I think, the time has now come for stock picking, which is, which is very different from, let's say, the general PSU index and the PSUs all going up. So during the rally, all the PSUs had gone up, but now time has come to look at which of those PSUs are attractively valued and have strong growth in order to justify their multiples as well as the future growth potential. So that's an interesting space, because if you look at, say, something like a State Bank of India, we've got very good numbers. You have an economy that is beginning to show growth, at least in the second half of this year, as well as, with the increase in liquidity, as well as lowering of the rates by RBI, that should have a positive impact on banks and institutions. And State Bank of India, being the largest of the in the space and is performing well, I think their valuations will look a lot better, a year from now. So there are pockets within the PSU space where one can look at, finding value and adding these companies. Similarly, you talked about the defense, space. All companies went up, whether they were able to generate higher profits, whether orders were getting executed with the same efficiency or not. But there will be certain companies which are able to perform better. And in that space, I think Bharat Electronics, Hindustan Aeronautics Limited, these companies, even Bharat Dynamics to an extent, these companies have come off. They're still not cheap when you look at their, valuations. But given that growth is more of a certainty going forward, the rate of growth may slow down a little bit, but there is definitely reasonable growth coming in over the next 2 to 3 years in the space. And that should justify the increase in valuations over the period of next 2 3 years. So some of these stocks can be looked at for accumulating over the next, and because you will see good returns in these companies over the next 2 3 years. But it is a very stock selective, decision, and you can't now just go and buy each and every PSU across the board.
That's the take coming in on the PSU space, how one needs to be selective in that particular front. But time for us to slip into a break.
Welcome back. Thank you so much for staying tuned in. Well, let's continue taking all of your stock-related queries. In fact, the next one that we have is actually coming in from Rakesh, writing to us from Bengaluru. Lancelot wants to know about the 5,000 shares of HCC at a buy price of 50 rupees. What do you make of this one? Because the time frame that he's at this point keeping in mind is 6 months.
It's 6 months is a very short time frame for an investment on a fundamental basis. Because markets can move in any direction. But if you have to look at HCC is one of the leading construction companies in India and has been finding its margins have been declining over time. Growth is a little bit slow. So I think when you consider the outlook based on this company's financials, it looks a little bit bleak, and maybe it's still not yet time to do bottom fishing in these companies.
And as far as Lancelot is concerned, Rupak, I'll come right back to you with this one because as Lancelot just pointed out, it's a very short time frame on a fundamental basis at least, but on a technical basis, what are you looking at when it comes to this particular counter?
Typically, the stock has given a head and shoulder pattern breakdown on the weekly chart. So for the midterm, the stock is looking weak and the stock has a chance to fall down towards 13 rupees. If it falls below 25 rupees. So if he's holding the stock, he can hold with the stop loss of 25. If the stock falls below 25 and sustains there, then he might consider reducing the position significantly or may exit the position.
All right, and that's the take coming in as far as that particular counter is concerned. Let's not tell you what the next one that we actually have is coming in from an investor who's not written his name actually, but he wants to know about his portfolio in this particular bout of volatility, in fact, that we've seen coming in for the market. He wants to know about a couple of stocks at this point. Dr. Reddy's Labs at 10 shares at a buy price of 1,386 rupees. And when you take a look at Indraprasth Gas, he wants to know about the 34 shares that he's holding on to, and his buy price was just about 214 rupees. So what do you make of this one then?
Dr. Reddy's is reasonably valued at this point in time, but and one can maybe look to accumulate more stock in this business because primarily the business is India centric, and they do have some exposure in the US, which may get impacted in terms of maybe getting delayed or may get this thing sidelined a bit. But otherwise, the overall longer term business outlook for Dr. Reddy's is fairly good, and one can look at keeping or adding to the stock maybe and holding it for, let's say, next 2 to 3 years. As far as Indraprastha Gas is concerned, they are one of the leading distributors of gas in the capital, and their gas distribution business is a good business because the market for or demand for gas continuously is growing. So given that background, I think it is one should look at accumulating this at lows, because the company is generating good profits. The growth will happen in terms of additional gas consumptions, and availability of gas is not really a constraint at this point in time. There may be a concern about the pricing of gas, but I think to that extent, the whatever increase in raw material on the gas procurement is, it ultimately does get passed on to the consumer. So margins should be fairly stable going forward. So this can be a company to add and accumulate as well.
I'll come right back to you because the next one that we actually have is coming in from Padma Siva Rao, writing to us from Bengaluru, wants to know about a 1,000 700 rupees is his buy price when it comes to PB Fintech, and he's bought 20 shares. He wants to know if he can average given the current pricing that we've seen coming in for this particular stock. Rupak, PB Fintech, what do you think about this one? 20 shares, buy price is 1,700 rupees.
So I think he should wait for averaging. Right now the stock is looking bit bearish and can fall down towards 1400 in the short to medium term. So 1400 is a level where he can consider averaging and keeping a stop loss below 1370.
That you must be keeping in mind as far as PB Fintech then is concerned. Lancelot, I'll come right back to you with the next one because Krishna is writing to us from Chennai, wants to know about Utkarsh Small Finance Bank. 600 shares actually at a buy price of 58 rupees. He wants to know if he should exit at this point. What do you think?
So he can place a stop loss below 2740. Below 2740, the stock might witness significant correction, further significant correction from there. And below that, the stock might fall down towards 24 rupees. And on the higher end, the stock has a resistance at 29. Above 29, the stock might witness a significant rally, but we need to wait for that. So currently, my suggestion would be holding the stock with a stop loss of 2740.
I'll come right back to you with the next one actually because this one is a long-term query that we're getting from our investor Satish from Bengaluru. He wants to know about a couple of counters actually. Tejas Networks 50 shares at a buy price of 1,157 rupees and Trent also at 9 shares at a buy price of 6,645 rupees. What do you make of both of these counters then?
I think both of these, were stocks that moved up dramatically, in the run-up over the last couple of months, and we have seen them correct because, they were very highly valued and now they are seeing some kind of sell-off. So even at this current levels, I think prices have still not become, attractive as yet. So I think one can wait for a further downside. Maybe a quarter later, you could see probably better prices. And at that point in time, one can accumulate. While the long-term business outlook of both these companies is good, you are seeing, long-term growth potential. But given the high valuations, better wait for a better entry point because then your returns could be better or more, could be averaged out over a better price.
All right, and that's a take coming in as far as Trent is concerned as well as Tejas Networks. But the next one that we actually have, Rupak is coming in on L&T. Subrata Mukherjee is writing to us from Calcutta. He wants to know if he should actually be booking losses when it comes to L&T as well as Godrej Properties because when it comes to both of these counters, he's sitting at losses at this point.
Has a very good support at 3220. 3220 should be a level below which he might consider reducing his position, but right now he can hold the stock. If the stock does not fall below 3220 decisively, then it might witness a rally towards 3400 in the short term. So it's a hold at the current level. And the other stock is
That's the take coming in as far as L&T is concerned. We actually have our next investor, Ajay, who's written to us from Pune. He wants to know about BSE at this point. He's holding on to 900 shares and his buy price was about 62 rupees is what he's mentioned. Lancelot, what do you make of this one then?
BSE Limited, one can continue to hold because, it is a stock that is going to continue to show growth. The exchanges operate on a fixed income basis. Yes, it looks, that it looks a bit high in terms of valuations. But given the long-term outlook for exchanges and BSE Limited has got, good growth in terms of volumes, number of accounts, the number of demat accounts being opened, all augur well for increase in, trading volumes and thereby the exchanges generate income from the trading that happens. So I think there was a bit of a negative thing that SEBI had, increased the margins for options to keep out a large number of retail investors. But, I think the overall volume growth that you will see, one should continue to hold BSE Limited.
Coming in as far as BSE then also is concerned, let's take a very quick breather on the show. When we come back, we continue answering all of your stock related queries, so don't go anywhere.
Back to Buy Now, Sell Now. You're watching ET Now and we're live from the Motilal Oswal studio. Let's keep it going with all your queries. And Lancelot and Rupak, hi, this is Nehi also joining in on the show. Lancelot, coming to you. Next query coming in from our viewer Chandrasekhar, writing to us from Hyderabad. And the stock in question right now is NTPC. He's asking if he should buy, avoid or wait. What should be the strategy when it comes to NTPC? He's keen on this stock, but given the way the stock has been reacting, last 3 months it's lower by 19% and factoring in the current market volatility. What's the outlook when it comes to NTPC?
So I think NTPC is one of the more better PSUs that are there and has been and is in a good space because it's in the power generation space. It has a subsidiary that's focused on green energy, and over a period of time they're going to increase their footprint in terms of green renewable energy. So that is a very positive outlook for the company and its growth potential. So the question is about since the market has fallen and the stock has fallen, I think this is good time to start looking at accumulating the stock because the company's return ratios have improved. You've seen a significant improvement in the working capital cycle for NTPC, and all that augurs well for the business going forward because with that net profit margins have improved. So I think one should start looking at maybe accumulating in lots on the way down because really, the selling is more a factor of how much liquidity is required in the market and people are selling in order to generate cash at this point in time. So maybe one should take advantage of that and look at buying some NTPC at between now and maybe 10 to 15% lower as well.
Coming in as far as NTPC is concerned, Rupak, the next one that we have is coming in from Subramanian, writing to us from Chennai, wants to know about GICRE. For the short term, is this a good idea to buy at this point?
GICRE has given a consolidation breakout and it has been sustaining below important moving average, and the indicators are also suggesting a bearish crossover, bearish sentiment for the short term. So I think it's not a level where one should consider buying. Buying level should be better. Buying level would be around 360 with a stop loss of 350. In that case, the stock, if the stock does not fall below 350, the stock might move towards 400 once again.
Coming in on GICRE on the technicals, Lancelot, coming back to you, we have our viewer Ignatius who's writing to us from Kolkata. He currently has 100 stocks of HDFC Bank at a buy price of 1400 rupees thereabouts. He's asking if it's a sensible move to book profit in that stock right now and shift all of that to Bajaj Finance, where he already has 20 stocks at 7,484. So wants to exit HDFC Bank and move on to Bajaj Finance. Do you think that's a sensible move to make right now?
I think it's a sensible move because when you're looking at a portfolio, you can't look at it from one stock versus the other. You have to have a portfolio of stocks, and I think if you have a portfolio that has both Bajaj Finance and HDFC in the portfolio, both are great businesses, good companies with interest rates coming off. Both will see a significant appreciation in their net interest margins. So I think it's important to build a diversified portfolio across various companies and keep both HDFC and Bajaj Finance in the portfolio.
That's a take coming in as far as HDFC Bank and Bajaj Finance then are concerned. Rupak, I'll come right back to you because the next one that we have is coming in from Ravi, who's writing to us from Pune. Wants to know about Eicher Motors at this point because he's holding on to 25 shares, currently sitting at 95% profits, but he wants to know if he should book profits at this point and move on to M&M or Bajaj, Auto for that matter.
Eicher Motor has given a correction of around 15% in the recent time, and the stock has reached near its previous swing low, and also the stock has formed a bullish harmonic pattern, which are indicating a short-term reversal in the stock. I think a reversal towards 5100 looks possible from the current level. So if he is holding the stock, he can hold with a stop loss. The stop loss should be at around 45. And on the upside, the stock can move towards 5100 in the short term.
Levels to watch out for Nisha Motors next. Lancelot, coming back to you. Our viewer Vijay is writing to us. He has 8 shares of Hero MotoCorp at a buy price of 3,980 rupees. He's asking if he can further accumulate on a SIP basis for the next 3 months at current levels. Interesting query. What's your outlook?
I think he can do that because Hero Motor is one of the leading players in the two-wheeler space. They also have launched their electric two-wheeler with the brand Vida, and as well as they are into the electric vehicle space, and over a period of time I think that space will also dominate the percentage of vehicles, two-wheelers being sold. So I think the stock has corrected significantly, and while valuations may be a little bit on the higher side, but since you do not know as to whether the stock can go down much further, it may be a good idea to accumulate, yes, on a SIP kind of basis, or even one can fix it based on the levels at which it is going down. So if it goes down, maybe 5% further, you could add more quantity, because over the longer period of time, I think Hero Motors should be one of the major players in the space.
Take coming in as far as Hero Motor then is concerned. Thank you so much, Rupak, as well as Lancelot, for answering all of those queries very patiently. Thank you so much for joining us on the show. But those were all the queries that we could, in fact, take for you on this edition of Buy Now, Sell Now on ET Now. Thank you so much for tuning in.